I would like to start off with a look at some data relating to past M&A activity before giving you a bit of an outlook, as I said, what I feel will be driving M&A activity and some of the challenges that deal makers are facing. Just as a disclaimer, the data that I'm presenting is based on the Merger Market database. Those of you that are subscribers will know the inclusion criteria. Those of you who are not familiar with it, we track deals with a deal value of over 5 million euros and a stake of at least 30%. If you need any more details, come and have a talk to me afterwards, or James Campbell is sitting at the back of the room, who's the salesperson that's responsible for Turkey, and he'll be able to give you some more details as well. Let me get started with this. M&A activity in Turkey has been comparatively slow over the first half of the year, with 59 deals worth a total value of 3 billion euros coming to market. That's a 40% decrease in deal-on-deal value, on year-on-year value on the deal side, and that's 44 deals less, so slightly sluggish there. However, we've seen a really marked increase in activity from Q1 to Q2, but that was largely driven by two significant deals in the consumer space. Those two deals have been classified as mega deals, so they have a value of over 5 billion euros, and that's something that we're seeing more and more of on a global scale. So as M&A activity picks up, we are seeing those really large transformational transactions, deals that companies have often thought about for a really long time, waiting for more stability in the market, waiting for the right opportunity and executing on those now. However, let's put what we've seen over 2015 into a little bit of context of what we've seen in the last couple of deals. So this chart here takes you back all the way to 2015. If we focus for the time being on the blue bars, which show the development of total deal value, so in sort of monetary terms, how M&A activity has developed. And I feel that in relation to Turkey, it's remained remarkably stable. I mean, you see the blue bars, as you see, there are some marginal up and down, but fundamentally it's stayed comparatively stable, with deal values of about, or total deal values of around 10 billion euros coming to market. 2009, you'll see the third bar from the left, obviously bad year, given the effects of the financial crisis and M&A activity going into sharp decline. But if you look at this chart, indeed on a global level, on a European level, different countries, it looks pretty much exactly the same. So Turkey is not an exception in that particular thing. I'd like to point out 2012, so the fourth bar from the right, which was a blockbuster year for Turkey, with deals worth 15 billion euros coming to the market. So really a standout year there. If we look at the development of deal volume, so the actual number of announced deals, and that's the grey line that you see zigzagging throughout the charts, we've seen greater fluctuations. 2009, again, an outlier year. I'd like to sort of, when you look at these charts, you might need to take 2009 out of it because it's not reflective of what we've seen left and right of it. 2009, 66 deals coming to market. However, 2014, we're talking about 214 deals coming to market. So quite a dramatic difference there. 2015, so far, we've seen 181 deals coming to market, and obviously we've still got a few weeks to go. Not entirely certain we'll hit 200, but just to give you a sense for where things are going. If we compare 2015 to 2014 up to stage, so a real year-on-year comparison, we've seen 111 deals with a total value of 6.1 billion euros coming to market, and that's a 34% decline in terms of value and 55% fewer deals than in the same time frame in 2014. So that's just an overview. As I said, the presentation will be online, so don't worry about the actual figures. I just wanted to give you sort of a sense for how things are developing in Turkey. Let's have a look now at where activity is actually taking place. In 2015 to date, the most active sector has been the consumer sector. However, I need to caveat, because obviously we've had two blockbuster deals in that particular space. So that will skew things slightly. And then the industrials and chemicals space. Together, those two sectors, so the consumer space and the industrials and chemical space, make up 60% of total deal activity in Turkey. So really, really strong sectors. And it's worth pointing out that historically, these two sectors have been particularly active in Turkey, but also on a global level. So Turkey slotting right into what we've seen on a global scale. If we go back to 2014, the utilities space, energy mining utilities, and the financial services industry have been particularly active, and that, again, something that we're seeing on a global scale as well. I'm sure the question of why certain sectors will attract more attention than others and what is driving investors into those will be addressed in some of the panels. So please make sure that you ask questions if you have sector questions. I know it's one of those things that people get quite interested about, why a certain sector is active, but also more interestingly, which sectors will be active in the future. So do ask questions as we go throughout the day. Now, I'd like to move on to private equity. I don't want to steal too much of my own thunder ahead of the discussion later on, but I'd like to spend a few minutes' time talking about private equity and the levels of activity that we're seeing in relation to Turkey at the moment. Aside from a few outliers on the volume side, the value side, the blue bars, it's remained relatively stable as well. 2011 obviously stands out as a particularly strong year. There were 30 deals worth a total value of 3.6 billion that came to market in those years. And to give you an idea of where things are right now, if we compare private equity-related activity in 2015 to what we saw in 2014, we've seen a 37% drop in overall deal value and 5 fewer deals being announced so far. And we'll spend a little bit of time exploring why certain deals aren't coming to market in my session in a little bit of time. Now, cross-border M&A activity, I don't want to take away from Alex too much, but I think it's worth having a look at where M&A activity or how M&A activity is composed in Turkey when we think about inbound, outbound. This slide is a little bit tricky because there's lots of different things going on, so I'll talk through bits and pieces. So we focus, first of all, on the values, which are the bars that we see in blue and in red. One thing that to me really stands out in this chart is that the inbound, so the blue bars, inbound activity has always significantly outperformed outbound activity. So we've seen more investors coming into Turkey than we've seen Turkish investors going, or Turkish corporates going outside of Turkey. And that all of a sudden changed in 2014. This is where my pointer would come in quite handy, but just go with me, the second to last set of blocks. So you see red and blue are quite similar on that one. What has changed? I believe the reason for this is that in the aftermath of the financial crisis and the uptick of M&A activity on a global level, Turkish players have become much, much bolder. There's definitely a sense of fear of being left behind as their global counterparts are engaging in M&A activity. Turkish players also want to do those deals outside of their home countries, and they've therefore engaged in M&A activity themselves in a much more large-scale way than they have done so far. I'm sure Alexander will touch on it in his session when he talks about inbound M&A activity for some of the reasons, for outbound M&A activity for some of the reasons, some of the other reasons that Turkish players are doing deals outside. So I don't really want to spend too much time going over that. I just wanted to spend a little bit of time talking about the deal count, so the volume of transactions that were being announced, which are the lines that we see going across. And there we see that obviously the blue line, the inbound deals, significantly outweigh the outbound deals. The reason for that, I feel, is that inbound investors will usually execute a number of smaller transactions, given the environment that you have in Turkey, where you have a large number of smaller businesses that are coming up for sale. That's what's on offer, smaller, usually family-owned businesses in the small to mid-cap size of the market. In contrast, Turkish players who look outside of their home market for M&A transactions and investment opportunities usually engage in the mid to large size segment of the market. So that's sort of how you explain that. However, there are two signs that this is changing, and that Turkish players are engaging in smaller bolt-on acquisitions, roll-up transactions as part of sort of an international buy and build strategy. So that's just a few thoughts that I have on cross-border activity. As I said, Alexander and I will be looking at the same topic from different angles a little bit later on. That's what's happened in Turkey in the past. I'd like to now spend a little bit of time thinking about the challenges that deal makers are facing when doing deals in Turkey, but also Turkish players that are looking outside of their home borders to do deals, before then rounding off with some of the deal drivers, so a positive spin on things. Turkey, I feel, takes a really interesting position, particularly when it comes to risk appetite. I'm fortunate enough to be moderating conferences like this across Europe and the Middle East, and I hear a lot about risk and what kind of risk people are willing to take on. And it's interesting, if you talk to, say, a German company or a French company, the kind of risk that they're willing to take on in an M&A transaction is quite different to what you hear to some of the players, say, from Turkey, say, from the Middle East. So the perception of risk is always obviously dependent on where you yourself are standing from and which environment you're coming from. The investors from some of the more established markets see Turkey as a riskier investment destination with potentially higher rewards. On the flip side, investors from the Middle East and, say, Africa and Asia view Turkey as a more stable environment for them to invest in rather than markets closer to home. So I think it's almost as if Turkey provides opportunities for everyone. So I thought that was a really nice one. Still, there are some challenges that deal makers are facing when investing in Turkey, but also Turkish deal makers when they're going outside. So let me run you through what I've identified. I'd like to say these are my thoughts. I'm sure not everyone shares them. I'm sure I've missed some off, and I'm sure there's also some that you think, well, actually, I as a deal maker don't see that as a risk. This is just my personal opinion, and I'm happy to be taking some flack for that later on. The first one that I identified was political instability, and this is unfortunately not a new issue. It's been around for far too long. And it is still having a massive impact on particularly inbound investors' confidence. And even once stability has returned to Turkey, it will take a few years for people to feel confident that when they make an investment in Turkey, things won't go off the rail. There's been an overall fundamental decline in foreign direct investment, and that is a reluctance to take on risk is the reason for that. Just to put this into context, in 2014, foreign direct investment stood at $12.5 billion US, and it's been at that level for pretty much 3 years. It's up from $10 billion US in the immediate aftermath of the financial crisis. However, it's still a very, very long way off from the $20 billion US foreign direct investment that we saw in the years leading up to the financial crisis. So it really is something to sort of keep in mind. One thing that I thought was really interesting as I was doing research for this event is the need to deal with this new short-termism that we're seeing globally at the moment. Investors are looking for extremely fast returns on their investment. A market like Turkey, and there are a number of other markets out there, doesn't necessarily provide that. People come to Turkey to play the long game. So you really need to convince players that Turkey is something that, yes, you're taking on a risk now, but there are opportunities that will emerge, as you say, but you need to have staying power to stake in this market. So Turkey will need to convince inbound investors that the returns are worth the wait. The valuation gap, this is something that we've seen emerging in Turkey, but is definitely something that we're seeing on a global scale as well. With the uptick of M&A activity globally, we've seen a real emergence of the valuation gap. Now, the valuation gap is one of those tricky things because in an M&A process, the seller is always going to want more money than the buyer is willing to accept. So that's something that is inherent to an M&A process. However, over the last couple of months, we've seen a real emergence of a valuation gap beyond that, something that has no longer to do with the underlying fundamentals that we're seeing within the company. And that is something where your advisors are going to have to work doubly hard to come to an agreement. The currency fluctuation is a huge challenge for buyers coming to make an acquisition in Turkey. This is usually something that comes up relatively far in the negotiation process, so when you've already thrown a lot of manpower, a lot of time at the particular process, making it quite sticky to extricate yourself from that situation. And again, advisors are going to be the key to overcoming that. And then finally, the decline in government sponsors projects. Those of you who were around when we had our first conference here 5 years ago, remember that there was a panel actually talking about privatization, and we've had privatization panels at previous events since then as well. This, I think, must be one of the first or possibly the second year that we're not talking about privatizations. Privatizations, by their nature, will not be able to go on forever. At some point, a government won't have anything left to sell. So this is not unexpected, it's not unusual, but it will have an impact on the ability to generate deals. So that's just something to keep in mind. Now, I'm always keen to end things on a positive note, so I'm going to talk a little bit about the opportunities that I feel Turkey has to offer potential investors. Corporate growth aspirations. This is really something that when I talk to corporates on panels or when I'm doing research for these events, it's really exciting to hear executives be excited about the opportunities that they feel are out there, their need to grow their business. These growth aspirations cannot be solely met by the opportunities that you see in the home market, and that is definitely driving Turkish and international players to look outside their home borders. Cash-rich corporates, this is a really big thing. It's been fascinating to watch how after years of really sort of tenseness when it comes to cash flow, we have seen lots of corporates build up really strong cash positions. They're going to have to spend that money somehow, and we're seeing that being deployed in M&A transactions. Cheap money. We're currently still in a phase of historically low interest rates. The Fed is slowly moving in the direction of increasing that, and that's obviously going to have an impact on the rest of the world as well. But for the time being, money is still cheap, and that allows companies to engage in M&A activity, to borrow money to do deals that 5-6 years ago they simply weren't able to do. Private equity exits, and I'm looking forward to talking to my private equity practitioners in a few minutes about that. We've seen over the last couple of years private equity funds getting engaged in huge buying sprees, but they still have a massive backlog of portfolio companies that they will have to exit. So over the next couple of months, we are expecting an increasing number of portfolio companies being brought to market and providing opportunities. And I'm particularly excited to see what's going to happen on the trade player front. When those portfolio companies were initially bought, trade players were often outbid by private equity funds with significantly more money at their disposal. This now is the opportunity for trade players to get their hands on assets that will make a real difference for their business. Inbound investors. Talking to some of you in the room when I was doing research for this event, but also doing general research, it's really interesting to see that players from China, from Japan, and from the Middle East are increasingly seeing Turkey as an attractive and, more importantly, less risky investment destination for them to put deals towards. So I'm looking forward to, in a couple of years' time when we have this event, talking to some of those investors that have made deals in Turkey and hear about their experiences. It is increasingly also seen, Turkey is increasingly also seen as an alternative to Russia. The sanctions and increasing isolation of Russia is putting investors off putting their money into Turkey and into Russia, and Turkey is seen increasingly as the destination where that money should go. And then finally, distress. That's something that we haven't yet seen that much of in Turkey. Banks are still willing to prop up their businesses that they've supported for many years, but there's only so long that they can support failing businesses. Eventually, they will have to ask for their money back, and that will provide opportunities for investors to go in and buy up those distressed assets. So those are some of the things that I personally feel will be acting as deal drivers in the months to come. So overall, while investors into Turkey and Turkish investors going outside of Turkey will face challenges when doing deals, I personally feel that Turkey remains a really exciting place to do business, to do M&A transactions. I hope you agree with you, and I'm sure that quite a few of the topics that I've raised in my short introductory words just now will be raised throughout the day as well.